Well, I'm going to the city and I'm gonna do a steady show. And I know all my fans wanna learn how to make some dough. I've been cruising up and down for trades each and every night. And with my iPhone reclining, I know we're gonna get it just right. I'll get inside your mind, we'll have a real good time. We're gonna trade today, we gotta trade today. Go askSlim.
Hi, I'm Steve Miller. Call me Slim. And this is the askSlim Market Week. It's a look back at what happened in the financial markets in the past week, and a look forward to what might happen in the next week. And hopefully, lots of great ideas and opportunities for you throughout the show. Well, the stock market corrected mildly this week as investors were less than enamored by earnings reports. And this is the beginning of the earnings season, so there's a lot more to see. Bank earnings start out as the first ones, and those numbers appeared to be good, but when you look deeper into it, their interest margin numbers were really weak. And that's all about the Fed, of course, which is keeping interest rates really low and talking about cutting them even lower. In fact, there are quite a few cuts baked in the cake now in this market, and that's going to continue to negatively affect bank earnings. Though some of the other big companies out there had done pretty well. Microsoft, now $1 trillion company, did great. Really, the numbers look terrific, but their Xbox, that gaming division, were very weak. In fact, the Xbox consoles sales plunged about 48%. So Microsoft maybe not all that great if you look at that aspect of it, but who can say anything about all-time highs? So great action in Microsoft, and it's been that way for quite a while. We've been positive on it. IBM, that one beat on earnings also. At first glance, the stock went down. They weren't excited. And then they looked at it again. And when you look at Red Hat acquisition, that really looked good for the company. So that stock did really well also on the upside. And the other side of that is Netflix, a stock that we have been extraordinarily bearish on, and that stock moved down sharply. I'm going to show you a lot of these in our best and worst stocks for the week. They had a giant miss on subscribers. They only grew at about half as much worldwide as expected, and U.S. subs actually declined. So competition is biting, and biting hard. The markets were weak early, as Monday we saw China's lowest growth rate that we've seen in 27 years. That was about 6.2%, and I don't think that's real. The oil markets fell very sharply, and they weighed on the energy stocks. So that helped the market go down as President Trump really soft-talked about Iran and talking about putting together another nuke deal. And critics are saying, well, that looks a lot like the deal he broke in the first place. So when it looks like it might settle down there, oil prices, well, they plunged. Wednesday, we saw the biggest drop of all as the president again threatened China with tariffs. It's apparently the talks are not moving fast enough for him, and so that may be back in the news again before we know it on a regular basis. Stocks rebounded Thursday and part of Friday as the ECB Draghi came out, and he laid the groundwork for even an easier policies there, discussing flexibility on inflation regarding it if it ever gets over 2%. That's a lot what our Fed has been saying, that they would tolerate higher inflation rates for a while just because of the weakness that it's had for such a long period of time. So that's really a shift also by the ECB, and he's kind of setting up for Draghi for leaving, hand the reins over to what I think is a nightmare of Christine Lagarde. So ECB goes from one super dove to one crazy super dove. So bad for them as far as I'm concerned. Stock market, we think, is very likely to hold together here and even rally as we have this Fed meeting coming up. And with the S&P 500 at some 3,000 here and a 21 PE, Well, you got to wonder, what are they thinking, the Fed, when they're thinking about cutting interest rates, and the market's actually suggesting that they might do that for 3/4 of a point. The total focus is on the expansion and fighting what are the normal cyclical movements, the forces that have the economy moving up and down, well, forever. They think that they can now overcome that. So there is hubris there like we have never seen in the Fed. And that's what they're really trying to do. So good luck with that. And that 3/4 of a point cut that's baked in, that could really set up a lot of disappointment. That goes out through 2020. And the market might actually be pretty ripe for some disappointment. But our work continues to say there's no top here yet. And what happens at market tops, and market tops take months to set up normally, they get very choppy, and you get some pretty good declines, and then the market rebounds and then moves to another new high. We think we're coming into that period pretty soon. While we're still positive, oddly, well, we think that there's maybe 2 or 3% upside to this market still over these next months ahead. But then there's these potential for these downside swoons while this top is being made. 10 or 15% drops are normal, with then the market moving back to new highs. So we think we're going to get into wider range trading with a lot more volatility than we have right now. That last rally that we think is coming, late this year, might even go into the beginning of next year, we think that's a big bull hook. And that once that gets set, it's going to be over. So we don't think there's a lot more, but we think that this top is going to start getting set up. And again, the process of that could be months. So look for choppier action. For this week, stocks, the major index just fractionally lower here at midday on Friday. Bond market, 30 years moved up 1.25 points, and the 10-year yields moved down about 6 basis points. And that 3-month to 10-year yield curve, which was so steep out around 12 or 13 basis points, is now flat. So the market is now starting to price in the cuts on the short end, and that's why that's flattening out. So if that happens, they'll start pricing in inflation on the longer end, and that will even steepen the yield curve. And of course, what I said before is that flattening yield curve is not good for banks, and it hasn't been in these earnings. And if it does start to steepen, well, then the banks may become a leader for a while on the upside. The gold market up $11, but that's not the story about the metals. The story is the silver market. And if you watch Future Speak, which is our really most popular video on Wednesdays for members, level 2 and higher, we talk about the gold-silver ratio, which has been trading up near records, up in the low 90s. And it looks to me like a technical adjustment. And I show you that chart and talk about that. So you want to go see that. Silver, the whole story, driving the metals market. Up $1 on the week, that's 6.5%, and that's a monstrous move, and it really drove the silver stocks, which were some of the best performers for the week. The dollar up about 0.3% on the week. It's still in that short-term resistance area I'll show you, and I think that that is probably going to hold it for just a little while yet. Oil, almost a $5 plunge. I mentioned that. Well, the president is willing to talk to Iran and make some kind of a deal. That's a 12% drop. And it shows you how there's just a massive amount of oil out there, and you get up in the $60 range, then the frackers are out there like crazy, shale producers. So the oil price can't go up unless there's an absolute crisis, and I don't really see that. So kind of think that 12% drop that we got this week, well, it's a breakdown, and we're going to show you what that looks like at the end of the show also. Follow me on Twitter at askSlim. Become a YouTube subscriber. You like this video, make sure you give me a thumbs up, and if you don't, well, give me the thumbs down. But make sure you leave a comment and tell me why. In fact, go to the YouTube and make comments. Tell me what you think about this show. Really appreciate that. That's it for the opening. We're going to be right back, and I'm going to bring you the best and worst stocks for the week. All right, what I do each week is bring you our cycle analysis on 10 stocks, the 5 best and the 5 worst stocks for the week. And I'm going to show you that analysis right now. Before I get into it, I want to make sure that you understand that this cycle analysis that I'm going to show you is available to you to put on your Thinkorswim platform, our preferred broker, TD Ameritrade. And if you don't have a TD account, please open one, and then you'll be able to get our top 84 charts that we follow weekly and daily updated to you and then live on your TOS platform. So please do become a level 4 member and you'll be able to get these charts. And I'm going to show you a little bit later on how level 3 members also get to see these charts. A little different form, but also we're bringing something just amazing. So make sure that you watch the little special I have coming up after the worst for the week. So let's look at silver stocks right now. AG was the standout on the upside. It's a cheap little stock. I'm not going to show you that right now. I'm going to show you Pan American. AG up 24% on the week. Just this giant move in silver stocks, and it's about leverage because with silver going up 6.5%, you get gains of like 20% in some of the stocks because of the leverage, how much it affects their earnings. So giant moves in here. Let's take a look at Pan American silver, one of the ones that we look at weekly in our cycle analysis. When you see colored boxes in here, these are essentially phases. So what we're looking at is a rising phase, and that's green. And then when this breaks down, as it did right over here, but doesn't break the low, but gets under the moving averages, it's yellow. And it completed the minor cycle there, and then another minor cycle. And then a big failure right in here. When we saw that, it turned red and gave you this big decline. Green, yellow, red. You can see that right in here, a perfect cycle. And now, rising phase, perfectly green. Now you'll notice a little corrective period right in here. So therefore, what we're expecting to see is this big move, which came right up to that cycle peak resistance right there, probably giving you a pullback. And this might be the most of it that we see in here, but who's to say? I mean, these stocks just smoking them on the upside, and Pan American just driving on the upside with silver 15%. Even golds were moving up, GDX 6% on the upside, which was huge also. So gold, silver did well. I'm going to show you that I think for gold in the short-term view why I think it's over for now in there, and we kind of just said exactly what would happen this week, and I'll show you that too. Here is Skechers. We love this stock. This was one of the stocks that we talked about a number of times. A lot of my members asked for this chart to be sent to them, which I did, of course. And look at this perfect cyclicality. You can see the cycle here making a low, and then the next rising phase, and what we call a bullishly configured cycle hits the buy zone, moves out and explodes and breaks out over the last high and hits the target zone. I didn't put that target zone in here this week. I put it in weeks ago, and it was a perfect move up there, moving up that channel. It's probably going to get tired now and rest at this point. Earnings great, analysts upgrading the stock, and we thought it would be at this price, and how do you like that? There it is. Next one we're going to look at is Philip Morris. Now, not one that we look at a lot, but pretty cycle action you see in here. And can you see how bullish this chart is? And do you see why it's bullish when you look at it? First of all, again, notice there are cycle brackets on the bottom, and this time we are showing the minor cycle and the dominant. Here's your minor cycle. So each of the dominant cycles made up of 2 minor cycles. Very clear, as you can see. And now rising here in this phase where the 2 cycles push up. 2 cycles up, 2 cycles up, and 2 cycles up. You can see that. So look at where we are now. You notice this neckline right in here? So the head and shoulders, or inverted head and shoulders that's forming in here, it would need to get over 92.40 to break out of that pattern. Of course, it could fail here and then move down, and this never happened, and you never get the breakout. But, in this area, in this day of smokeless tobacco, they seem to be really doing well. Earnings beat, analysts liking it. well, some of them are, and their buybacks numbers are picking up. So there was a couple of analysts that didn't love it still, but the pattern is suggestive of a breakout coming. So Philip Morris, we think it's a potential very bullish pattern, and I would watch for that potential breakout coming in there. The brokers have had a very hard time of it, and they, of course, are living in a low interest rate environment also, and a low commission environment also. Schwab had good earnings. It moved up, and this is a very tough environment. If brokers cannot make money on the commissions, which it's very hard in this world, then they have to make money essentially on the account balances, on the money they're holding. And with interest rates really low, that's tough. And with interest rates falling, that's tough. So you can see in here, remember I just showed you the Head and Shoulders bottom forming in Philip Morris. We'll look at the Head and Shoulders top that formed in this one. And it came right down to the measurement. Almost magical. Then when it rallied into the sell zone. So there was a rebound. The sell zone is, well, our swing high, swing low analysis is really where this comes from, and you can get that by watching a couple videos I have on it. And also look at the counter trend neckline right over there. Well, it couldn't get up quite to that, but it hit the sell zone, and that was it. Now, the fact that this decline right in here was almost 100% of this rally says that the probabilities are high it's going to fail in this area. Hence, we don't only market resistance, we market sell zone, just as we did over here. It's likely that you're going to trade up in here for a few weeks, but then we're going to trade down again. I think if I was a holder in Schwab, it would be a sell. If I think I was tempted to buy this one based on, well, it looks cheap, I wouldn't. That's me. And I don't make recommendations. I just show you the analysis. Here's that IBM chart I was talking about, benefiting from the Red Hat acquisition. It's got beautiful patterns in here right now. Well, first of all, look at the negative ones in here. You could see this cycle ended here and then here. So it was negative. You see it's lower. That makes this red zone here. Here it broke down right at this point right here and then declined right to this point. Beautiful. And then the low made here. Beautiful. And now you can see the resistance zones in here. This cycle peak, the major 78.6%. And this area right over here between 54 and 57. That's kind of the upside target here for the next few weeks. So we don't actually see a lot of upside left right now in IBM, but it had a great week, up more than 5% on the week. And again, that Red Hat acquisition really seems like it was good for them. That is the best of 5 stocks for the week. And again, silver, the monstrous movers on the upside. And we'll be right back, and I'm going to show you the worst and some really bad ones. All right, for the worst stocks for the week, we're going to start out by, well, one that, again, I don't look at that much, in the communication equipment category, ADTRAN, A-D-T-N. It is in my list of 320 stocks, but it's not one that, I look at a lot. It's just not that much of a widely followed trading stock. But when you look at the patterns, they're pretty beautiful. And this decline now coming at a time when, again, a minor cycle and a dominant cycle pointing down. You can see that. So now this gives up almost all of the gain, just as I showed you before, and that then projects to a low. Well, I don't have an anchor point in here yet, so we have declining resistances right now, and it's likely to get some kind of rebound and then move sharply lower again. So interesting, negative configured cycle, and now looking like this will be the same. Really a bad looking stock in here. Earnings beat, but their guidance was really weak, and this is a collapse, 25% down on the week. Definitely the worst stock for the week, and one of the worst stocks that I've seen in a long period of time. Now, energy stocks, they were stocks that did really poorly, and you can imagine if oil is going to plunge $5 in a week, that the energy stocks are not going to do very well. Here's Halliburton. This is, again, look at the negatively configured cycles. 1, 2, 3 in a row, and this one threatening to be the same. Again, the sell zone here, that's where we thought it could rally to, but look at how much weaker it is. It doesn't look like that at all. Look what happened. Let me get a little closer look here. Look what happened on this one where it got into the sell zone. It tried to fight its way through it, but couldn't. And then the end of the cycle, the sellers come in. So right now we're kind of mid-cycle. We haven't broken down yet, but under 21, and it's going to be so. That's only 65 cents away. This is the OIH pattern right in here, and you can see that the whole groups are kind of following right with this stock. These are sick-looking stocks in the drillers. Schlumberger down about 5%, Diamond Offshore down 15%, Rig Transocean is down about 12% on the week. So sick group in here, and I think it's going to get worse for them. I just don't think, based on what I'm seeing in oil, that there's a lot of upside potential at all. Here's another oil stock. This is Apache APA. And this is just ugly. So I want you to note that there's a dotted blue cycle in here. What we got is some shifting action in the cycle. So we reflect that when we see those changes going on. And this is really looking like a breakdown, and that would take it all the way down into November. So a bad looking pattern in here also in Apache. Breakdown, and earnings come out on 7/31 on this. So we'll see if it can get rescued in any way, but just a sick looking stock and a sick looking group in the energies. The energies are not going to help the stock market move to the upside. The next one we're going to look at in here is one that, well, the next two, I'm going to take kudos for this, and that is we were really bearish in here in Netflix. And again, I showed you that, these beautiful big head and shoulders, and this was a good one in Netflix. It broke almost to the measurement right over here, didn't quite get to it, and it rallied up a little bit further than we expected. This was kind of an upper sell zone right in here, and it was really fighting. It makes this double top here in this cycle that you can see. And I had we had shorts on, right? So I had a little note in here that this line is where you stop the shorts out. Look at how close that got, man. But then the cycle really took hold, and the declining phase, well, you could see it on the low for the week right now. This stock giving up about 14% on the week, and there is more to come. In fact, I think there are giant declines coming in Netflix. This cycle right over here is bottoms, give or take a few weeks, somewhere between the beginning of August and the middle of August. So we're looking for 2, 3, 4 weeks of decline. It's likely to get down under the 310 area, maybe down to about 290 right in here over these next few weeks. And then we think any rally out over here while the bull market's making its highs are likely to fail. We'll have an anchor point and a sell zone in there, and then we think it heads lower. The stock could easily be sub $200 next year. So we're exceptionally bearish on Netflix. We've been that, and 13% down on the week. And another stock that we have featured in our videos about stocks that we thought were negative and should be sold was Domino's. Domino's earnings beat, but their sales really missed, and we've been negative, and this is really a bad-looking stock also. Interesting, it's really been able to get good rallies in here despite negative patterns like this. It gave up almost the whole gain right over here, as you can see, and now it's done the same thing. Now, this one also has about maybe 3, 4, 5 weeks to go before the bottom, and then we think it will get a temporary bounce, but also we think this stock is sub 200 in sometime in the next maybe 4, 5, 6 months into next year, and that the stock has a ton of risk. This is a widely held, everybody has loved it. It's been on my riskiest list, you can see right over here, and it has for the year now just up maybe a couple pennies. It's not up very much for the year, and we think it will very, very possibly be down for the year before you know it. So we were negative, and that is a very, very bad looking pattern when you look at that, and a major top that's taken, well, over a year to form in there, and we think it's headed a lot lower. Domino's, Netflix, stocks that we haven't liked, and we still don't like them, even though they've come down this far. And I know traders, you're so tempted to buy them when they look cheap, right? Because they're going to rebound. Well, good luck with that. All right, we're going to be right back. And don't fast forward right now. I'll tell you why. Because an unveiling is coming right now, and you're going to be just amazed at what I'm about to show you. So I know lots of people, you want to get past my little promo here and get into what I think is going to happen next week. Don't do it, because there's something coming up that you're going to love. All right, so before I show you the short-term charts, you got to see this. We've been working on something now for months and months and months. You know that my style of analysis is very different from other people as we look at cycle analysis, but we put a ton of weight in momentum analysis also. Where does that come from? Well, it comes from the fact that I used to be a floor trader. And I lived in a world of market chop. We made our money off of the chop in the market, making markets and buying on the bid and selling on the offer and spreading them off and doing other things. And market movements are really what gave it to us. But the world changed. The world changed many times through decimalization, which really made much more depth in the market, and high frequency trading, like deep pools, dark pools. They all made the market much, much more stable. And on top of that, of course, a Fed that keeps pumping money in also keeps the market very stable. So all of those factors meant that if you couldn't analyze momentum, well, you didn't get it. I mean, you just weren't getting the market. So all along, the analysis we've done has really focused a lot on momentum. I want to unveil to you now our next iteration, the real big change that we're having in. We used to have rankings and trade setups, and it was a beautiful table and gave you all of our colored pictures that showed you momentum for the top 84 best traded symbols. We wanted to create something that was much more user-friendly and actually gave you an output that not only could we put our information in, but then the algorithms would give you some sense around market condition and what were the highest probabilities. That's what we wanted to create for you. And we have now done that. I'm going to show you just this incredible program that we have. This is for our level 3 and 4 members. However, right now it's free. We're beta testing it. We want everybody to see it. If you're not an askSlim member, become a free member. Just go sign up for free. For the next about 8 or 9 days, this will be available to you for free, and you'll be able to watch that, and then you'll have to subscribe, and we'll have some specials around that. But I want you to make sure you go to our site now. If you're not a member, go sign up for a free membership. If you are a member, well, then go in and look at this for sure. This is the Slimulator. This is our ranking system in beta. So there's our website right there, and all you have to do is click on the dashboard, and it will take you to the Slimulator ranking system. And in here we have a little bit of information for you to read so you can understand what it does and what this next iteration is. And here is the Slimulator right over here. Now, I'm going to explain this to you, and that is, we do analysis in 3 different time frames, actually more, but that is not something that we share on the short term except for our level 4 members. But here you could see is our long term, our intermediate term, and our short term rankings. But instead of just giving you these rankings right in here, what we're now doing is giving you an output. So what this does is it calculates what, based on our specific weightings, what the directional bias is. In other words, what is the highest probability of the inertia, what direction is going to keep moving in, and what the technical evidence shows for the next 3 to 6 weeks. So in other words, it's a short-term trader, swing trader, option trader type analysis, right in the sweet spot of option trading also. And then we give you our option bias indicator. So let's just look at this and you can see what this looks like, and that is, I'm just going to scroll down a little bit and I'm going to take you and you can see all of the stocks that we look at right in here. And there's 48 stocks and 12 ETFs. We have all of the major ETFs in there. And then we have the stock indexes and futures. So I'm just going to stop here, and you can see on the top the GDX, which is gold, and the stock indexes and futures. So what do we have here for the stock indexes? Well, the S&P 500, you can see long-term, intermediate-term, short-term, and our option bias indicator, all very positive. That says very bullish, and the technical evidence favors alongside bias. We've been in that condition for a long period of time, and you would not have gone wrong following that. You'll notice that the Russell, which is bullish, and it still favors alongside bias, still has a long-term negative reading. So it's not quite as bullish, but it's still positive and what we're looking at. So we have this in for all of the widely helds in here. Now, what's really cool is you can now sort. All you have to do is click on the long term, which right there, or the short term right here, or the intermediate term. Let's click on the intermediate term. And I'm going to look at all of the stocks in here that are red on the intermediate term. Now, if they're also red on the long term, well, that's telling me that this is not investable at all. And you'll notice the British pound, well, it's very bearish, and it has had a breakdown. You notice that, and it has been moving to the downside. So this is all incredibly cool when you look at that. Now, Netflix had a breakdown in there, so this will be turning more negative than it is right now when this gets updated today or on Monday. So we do this every single morning, and these are updated every morning. And what is also so amazing is that you see Netflix right over here. Remember, our charts went to only level 4 members. Notice here, weekly chart, daily chart, you can see right there. All you have to do is click on those, and this is updated once a week, which lets you see our weekly analysis right there. You can see that on Netflix. That's just the chart from yesterday. And this is the daily chart right over here from Netflix. That's the chart from yesterday. So not quite updated yet, but this is, of course, beta. So we're not showing you every single thing. Here is the look at the S&P 500 so you can get an idea. I'm just going to move to there you go. So I'm going to change this to long term right there and reset the view, and there it's now reset. So if we look at let's look at Apple right over here. We can see the Apple weekly chart right there, beautiful weekly chart with all of the cycles on it, and you can see right over here the Apple daily chart right there, and gives you all of the cycle analysis on it. So just a tremendous amount of information in there. If you want, you can go to the search right up on top if you're just interested in one particular stock, and all you have to do is type that in. Let's say we wanted to look for IBM. I type that in, and there's the IBM. It gives you that information right over there, and you can just reset that view. Also in here, and I'm going to go to whoops. I'm going to go to Twitter right now because I want to show you the Twitter because we have a trade setup in there. Let's make this show all columns, and we'll go down to Twitter right here. And I want you to note Twitter, very bullish, all of this information in right in here. Now you see it says note right there. I'm going to click on that. If there was a change in there, it would show you the change. It will show you our notes. And in this case, we have a trade setup in there. We're a level 1 long trade setup. So all of our trade setups are in there also. This is just an amazing thing. It'll take you a little time to explore it and really understand it, but you can use this for really any type of time frame that you're looking at. It's fantastic information. We've had people writing us that saying they made a number of trades that were really great off of this. And it's just amazing. I don't think there's anything out there like this, and we're going to keep updating it and making it even better with some more great stuff coming into the Slimulator, a program with our logic in it that nobody else has. You want to look at it, become a free member, take a peek, and I think that you will really be interested in using this long term. Puts all our analysis into one page and even tells you what it all means. How's that? That's it for the Slimulator, and I'm going to bring you the short-term view right now. Make sure that if you have any questions, you write to Matt, M-A-T-T, at askSlim.com, and he will answer your questions, and I'll be glad to also answer any questions about our new snapshot, stock index report, daily morning snapshot, that also is getting rave reviews. So Matt at askSlim.com, any questions you have. All right, so now let's get into this short-term view for the stock market, for the markets, and I'll give you the stock market last coming up. So I always like to be accountable to what I said and then rate that. I believe that getting more than 60% is acceptable. This week was 70%. What we got wrong was the bond market, because we thought that the bond market would move down again. Instead, it's creating a bear flag, so we think it's going to move down again. Just to finish a corrective period on here, light crude we thought would go down. Well, you think we would get full credit for that, but not, because it actually, we had a little buy zone in there, and it drove right through all of the supports and then broke down. So we get only credit for cycle and direction in there, but not for the magnitude of that decline. Let's take a look here at light crude, and you'll get an idea of what I mean. And again, we're always looking at momentum, so we want to focus on that when we do this analysis. And you can see right in here that, see this cycle support right there, that low, how it held, that was our buy zone, and it moved up, and it got up into this resistance zone from the weekly. If this was still strong, this corrective phase right over here would have held in what we had as a buy zone right around this area. It didn't, and the upward momentum that we had is now lost and has gone negative. This says to us it's done. This breakdown right over here designates that the weekly or intermediate pattern has now broken down. I don't show you those, but watch Future Speak and you'll see them. And we'll have an update on our energy stocks this weekend, our energy charts for our level 4 members that is going to reflect that. What this looks like is we're going to get a couple more days maybe on the downside in here and then try to get up. This sell zone right over here is probably declining, depends on how low it gets in here. So we think that this week is going to be a small up week, despite the fact that it broke down. Would I buy for that? I would not. I would wait till it got up over here and trade the short side. And so we're kind of looking for an upward move into here, maybe getting as high as 57.11 up there to even 58. That might be a big bounce and not easy to do in these next couple weeks. But that's our sell zone. We think it's in bad shape, and if a rally came, we would sell it. Momentum now negative, and that's bad. Now we're going to take a look at gold /GC. We think it's a short-term top. Last week we pointed out that we thought that it was, in our future speak, in our intermediate analysis, we thought it was in a corrective period. That when we looked at the short term, we thought that it was forming a bullish pattern, so that we thought it would break out and get up over the 1442 area. We said maybe even into the 1450s. Well, it did exactly that. Note the engulfing pattern right over here. So it says that this rising cycle, this small one right in here, I'm highlighting the dark one, is topping and coming down. And you'll notice this gold forecast line right there. So we think that gold's going to have a down week, and it's going to test the area of about 1420 to 1410 in there. It could even get a little bit lower, and then again move up. These cycles out over here match up with a low in the gold market that is out in August. So this corrective period that we're looking at, in other words, a time period where it should be not able to make a lot of upside ground and maybe make some downside ground, goes out to around the third week of August. So we think that we're likely to be done here on the upside, and that it will not give a lot of ground because momentum, you can see right over here where it turned positive, remains so. So the slim ribbon gives it support. This area of 1410 gives it support. We don't see it getting much under that, but we're going to call for a down week this week, and a small one. Based on what we're seeing in here, testing that 1420 to 1410 area. And it all has, a lot to do with the action in the dollar, whether or not the dollar can get any real upside move going. Now, based on what we're seeing in the dollar, and I'll show you that right now, the answer to that is not yet, in our opinion. So that's why we don't think that the gold market is going to have a big drop. As a matter of fact, we think the dollar is going to have a down week that we see in here, coming down to late in the week and then probably turning up. So this dollar pattern is suggestive of the fact that it's probably going to back off a little bit. We'll call in here a small week overall in the dollar, and then the following week in a period where it could move up. That's a period that's more risky for gold 2 weeks from now. Than it is right now. So momentum in here very choppy, you can see that, and not giving you any real momentum signals at all. We're just going to look for a down week in the dollar, setting up what might be a better period for a while. So that is a look at the dollar. /ZB, the bond market. Now, we thought the bond market would be down for the week, and this one we got wrong. Now, what we were looking at was this cycle right over here. In other words, this comes out to this period. So that still calls for a decline. You'll notice the flag in here, and you'll notice that after a very long period of upward momentum went neutral, and it's still neutral. We still think that there's a down week coming in here, and this lines up with an intermediate low. So that says to us that if we do get the downside week we're expecting in the bond market, that it might be setting up a much more favorable period way out over here. So we're just going to call for one more dip in the bond market being this week, and then a better period after that. And we think that we might be getting into a better buying opportunity for some higher prices in the bond market. So that is a look at the first four. Let's talk about the stock market. So the stock market had a correction this week, and it really wasn't much. Got hit earlier in the week, and then it came back on Thursday, and it's trying to hold together here on Friday. And overall, as we said in the beginning of the show, we think all of this is just simply modest correction in what is likely higher highs coming in the stock market. We're still focused on the S&P at around 3032, and that might be not all that far away when we look at these charts. The pattern is suggestive of an early decline coming up this week. You can see that right there as we look at the S&P 500. Now, again, we're looking at momentum. I showed you the simulator, and I showed you how it showed all of that green, all of those powerful patterns in there. And here is just another reflection of that. We see the slim ribbon going up right over here, and all of this upward action. Well, that's super bullish. And when you get this late in the cycle right over here with only this little bit of time to fall, well, all you probably are going to get is one little dip. We're looking for a dip into the area of about 29.86 to 29.66, right here in the middle, with a potential of about 29.53, but not likely. And then after this period here, moving up again. Here's that weekly fib extension at that 3032 number, and you can see that this next rising phase right over here is likely to get you there. So that would mean that if you get this little dip, you really do have to initiate upward bias again, or long side bias. And this, of course, when you look at this, helps you understand the simulator more, because it says positive. We're looking for downside, but we're looking for only minimal downside. and then it moving up again. So we use all of that information, the logic that's in the simulator, and the visuals that we see here to help us with that. We're going to call a small change on the week. Why? Because we're looking for dip rally. I don't think that's going to be much of a change. Dipping into that area, momentum still strong, the decline should be shallow, and new highs should still be coming. Despite anything I say about tops forming and all that stuff, that's happening and more volatility, everything we're looking at still says up. So we want to really focus on that. That's really what's most important, because most of us are shorter term when we look at that. So hope that's all valuable to you. Go to right now to askSlim.com and become a free member so you can explore this simulator right now, and I think you're going to find it just phenomenal. That's it for the show. Hope there was a ton of great information for you in here, and I want you to be so careful. It is so crazy out there. I'm always wishing you great trading.
Well, I'm going to the city and I'm going to do a step.